So Powell and Yellen tag teamed the market today, and at the end, it dropped off a cliff. Hi, this is Randy Kirk, and we're going to be talking about what happened in the market today. We're going to be talking about the consequences of the Powell statement and what the Fed had to say and all that stuff. And then we're going to apply it to Tesla and see what we think that might have to do with all the good news that Tesla's been having lately. If you like this kind of content, you know what to do. Let's take 1 second though. Normally, I don't talk about the other videos I've been doing recently or the ones that I'm doing in the future. But this week in particular, I just have to take a pause right now and tell you, you should be watching every single video this week. First of all, there was 2 videos already put up this week with regard to Joe Justice and how he sees the agile effort at Tesla. And he says in that video that no other manufacturer, this is in video number 1, no other auto manufacturer in the world will be doing agile manufacturing by the end of this decade. You want to see the rest of it? That was the big news takeaway, but that was on video number 1. On video number 2, he talked about the way that the Tesla Agile Factory works. He talked about all kinds of aspects of the other companies and how they dovetail with what's happening at Tesla and how that might change the entire world economy, in particular when you add in who? Optimus. But you want to see that video. Tomorrow, 8 o'clock in the morning, California Daylight Savings Time, 8 o'clock tomorrow morning, I'll be releasing the 3rd video in this series. And this one is going to be all about Optimus. And believe me, it is a news breaker. You don't want to miss this one. And then on Saturday, I just did a video with John Gibbs and Scott Walter. And you know those 2 guys. There's been so many videos this week with regard to Optimus on John Gibbs' channel and also on Brighter with Herbert's channel. And he interviewed Scott Walter. You probably want to watch all of the videos, but if you want to kind of see some additional content that comes out of all of that, that would be on the video on Saturday. And then on Sunday, I'm going to do one that kind of wraps it all up. I'm going to take a look at the entire week and say, what did we learn about Optimus? What did we learn about Tesla? Because there was a lot of stuff going on. So much so that John said in my interview today, or actually I think before we started the interview, it's almost impossible to keep up, even if you run the darn videos at 1.5 speed. It's been a crazy week. So be sure and see my videos and then like and subscribe and then hit the notify button if you want to be notified about tomorrow's video and then about Saturdays and Sundays. Oh, there's one more. Just let me throw it in while I'm talking about it. We had a great additional video. I think I'm going to put this one up tomorrow, Friday. And this is with John and Scott again. And we were talking about the whole AI, the ChatGPT thing. There is valuable takeaway in that video, stuff that you'll be able to use right after you watch it. You'll probably want to jump on some of these different AI programs that are out there right now and test things out, because I learned so much. I know you're going to learn a lot out of that one. That one, I'm sure I'm going to put that up sometime tomorrow. Probably, I'm sorry, Friday. On Friday, that'll be going up on Friday. Okay, let's now jump into the subject at hand here. Okay, so Powell walked a tightrope after Janet Yellen did her best impersonation of a leader. I mean, this woman was talked about as somebody who was really, really going to be a great Treasury secretary. She has the credentials. She's obviously smart as she can possibly be, but I don't know who's telling her what she can and can't say or can and can't do, but she did not help anybody out there think that their deposits were in great shape. She said that maybe some deposits above 250,000 would be covered with some of the smaller banks, maybe sometimes, depending on whether there's a perception of a systemic risk. I'm sorry. As a depositor, as a banker, as an investor in banks, how did that help you at all? Did that help you at all? Maybe if we think that we see a systemic risk, we might take care of depositors above $250,000 on smaller banks. What's a smaller bank? When do we perceive a systemic risk? This is not rules. This is not a method. This is not a way that you can make decisions. This was a complete failure of leadership. I can't think of how it could have been any more complete than that. And the market agreed. The market went down after she spoke. Well, then Powell comes on and he says, well, gee, depositors should assume that their deposits are safe. We have the tools. Quote, unquote, depositors should assume their deposits are safe. We have the tools. Well, that's good, except it says nothing. It says absolutely nothing. Now, the markets liked it. It kind of popped up again when he said this, but the truth of the matter is he didn't say anything there. Assume your deposits are safe. Well, we always did assume our deposits were safe. Well, I've got a friend of mine. She works for a smaller bank, I think under the definition, under the Janet Yellen definition. And she says that banks already have ways for large depositors to ensure their larger accounts. It's just that most of them didn't think that they needed to. In other words, they thought that they should already assume that their deposits were safe. Well, they didn't take into consideration that the Fed would raise rates at the fastest rate in history, and that we would have an inversion between the 10-year and the 2-year that is the greatest that's ever been in history. And for the longest time, nobody was expecting all of that. And the banks didn't either. Now, I'm not suggesting to you that SVB or that which called the Swiss bank, I'm forgetting the name of the Swiss bank all of a sudden, I just went out of my brain. Anyway, that these banks were well run. They weren't. They were horribly run. However, I think it's the Treasury Department's responsibility and the Fed's responsibility to notice when these banks are starting to have problems. And in fact, there were plenty, well, not the one in Switzerland, but the one in California. There was plenty of news. There was plenty of available information for the Fed or for the Treasury Department to step in earlier than they did and try to solve the problem. Anyway, that's a whole nother story. We could do an hour on that probably. What is happening right now? Let's talk about what's happened in the last 20 days is that lots of deposits have gone into the Treasury and into money market funds. Huge outflow. Again, this friend of mine at this regional bank talked about the number, and it's a regional, it's a regional bank. The numbers was in the billions of dollars that outflowed and that has not come back. Well, if it hasn't come back, what does that mean? It's got to go somewhere. So where it's going is into money market funds. Those deposit outflows have stabilized. The Fed said it. My friend said it's true for them as well. So I'm only using her as kind of a backup on a large regional bank. But the reality is the Fed says that these funds have stabilized. The outflows are not continuing out of the banks. However, they haven't come back in either. So they're still sitting out there in the money market funds and other places, other cash places that are equivalent to cash. So that means that we have record amounts of money in money market funds. I tried to find it. Maybe you guys can help me in the comments below. I tried to find it. I know that the amount of money that was sitting on the sidelines from investors was also at record highs. I don't know if it still is, but let's assume that probably the amount of money that's not in the market that could be in the market continues to be at record numbers. So there's massive amounts of money sitting on the sidelines right now. Now, is that good news? Is that bad news? How do we figure that out? The interesting thing is that the money that's sitting on the sidelines or the money that's being invested in these money market funds and in the treasuries, people are willing to make on a 10-year treasury, they're willing to make under 3.5%. Because what happened today, as all these Fed comments were being made, is that the 10-year bond dropped and the 2-year bond dropped. In fact, the 2-year bond dropped under 4%. The 2-year treasury bond dropped under 4% for the first time since October. That's pretty significant. When did it drop? Right after the Fed said that they're not going to lower interest rates this year, and right after they said that they're raising it 25 basis points now, and that they're still fighting inflation, that's the number one job, the treasury bonds still went down. Well, that suggests a flight to safety. I think that's obvious. I don't think that is necessarily an additional, lid on the container saying that everybody believes that inflation is solved. I do believe the fact that 10-year bonds have stayed at 3.5% to 4% during this entire 6-month period. I think that is an indication that folks that are investing, serious investors, think that inflation is already solved. It's already at 2%, maybe even lower. I continue to believe that. Everything that I see continues to make me believe that. In particular, looking at oil, again, as a major category to take a look at. Oil continues to be under $70. I think at the end of the day at 68 or 69. So that's just my take. I'm just one guy, all right? So while all of this, so Powell, of course, offered his one dovish fig leaf. He said that the committee considered a pause. And I think that's why the market was kind of only down a little bit until the very end. He said there's still a pathway to a soft landing. Yeah, who's believing that? Nobody. Do you believe that? Put it in the comments below. Yes, I believe that Powell believes, or yes, I believe that we have a likely soft landing. I have two points of, I have two positions. I don't see a soft landing at all. I either see a hard landing because the Fed oversteps and goes too far, or I see no landing at all, that this will be a, there will not be a recession. It will not even be that much of a slowdown. We will continue to see low unemployment numbers and decent profits coming out of our major companies. We'll see. We'll know in April. All right. So overall, unless there is more news in the next day or so, and there's nothing in particular, no huge news expected, I think the markets will be flat. I think that we've got the bad news. We got the sell-off. The news was not that far away from what was expected, except for the very last part about, no chance of lower rates this year, or no plans, no thinking right now that there's any chance of lower rates the entire year. That news was not expected. I think that all of this is played out. So I'm thinking maybe we'll be in a trading range until there's something bigger to chew on. We just don't have anything coming right now that's to be chewing on. I think it'll be April when we start getting back into the CPI, getting back into the PPI, getting back into what the economy is doing, getting back into the major companies all talking about their first quarter results. So I don't see much happening in the last week of March that's going to move markets. But, there's always something. We certainly didn't expect all these bank failures at the beginning of March. Okay. I think that if we talk about Tesla specifically, couldn't ask for more good news. You got the Moody's upgrade. You've got record sales all around the world, in China, in Europe, in the United States. You've got Tesla Model Y beating out all the other companies all around the world. You've got new products coming on board. You've got the robot, which is bigger than anybody thinks. Well, anybody, but you, of course, you and me, we get it, but nobody's giving Tesla a nickel for the value of the robot. So, but the news is just, I don't know how you could ask for more good news coming out of Tesla right now. So given that, I don't think that many investors are paying much attention to individual stocks right now. Oh, sure, everybody's got their favorites and they buy and they sell and they make decisions. But the reality is, I don't think anybody's paying much attention except folks that are day trading and short-term traders. So I don't think much is going to happen with Tesla until the earnings report, and that will either be on the 19th or the 26th of April. So we got a long way to go before that. Yes, we'll get the production numbers here on the 2nd of April, but even those, I don't think, it looks to me like they're going to come in pretty close to expectations at around 240,000. Could be more. Did I say that right? I think I said that wrong. 440,000, right? Yeah, 440,000. I think they're going to come in pretty close to expectations. Maybe beat, but pretty close to expectations. All right. So as I noted in my Sunday night report, Tesla should be a value stock. It should be, it's now a blue chip according to Moody's and S&P. It should be looked at as a blue chip stock, but the stock is so volatile and has been volatile, has still shown itself to be so volatile right now that it's almost impossible for the stock market, for for the folks who make the decisions at the highest levels to see Tesla as a value stock. That narrative is going to take a while to develop. It would mean that you'd have to see far fewer people involved buying options in Tesla. Right now, it continues to be the stock with the most options activity, and that, of course, keeps it from being keeps the narrative from being that Tesla is a value proposition, a value stock. So it's going to take some time. Maybe the blue chip narrative will stick 6 months, a year from now. Maybe it'll take 2 more quarters of really solid earnings. Not 100% sure what it'll take, but until the narrative changes or until there's some huge breaking news, expect Tesla to follow the macro. That's what I'm looking for it to do. So hope this has been useful for you today. Hopefully, remember, I am not an investment advisor. Do not take my advice at all. and this is just for your entertainment. If it was entertaining, it was just entertaining, would you hit the like, subscribe, notify, and go back and look at those Joe Justice videos and hit the notify so that you can see tomorrow's Joe Justice video is going to blow your mind. And it's been great talking to you.